Critics have gathered to call cryptocurrencies a Ponzi scheme since individuals started investing in them. According to the logic, because Bitcoin doesn't accomplish anything, its worth can only increase if more people purchase it, raising the price. Does this, however, make it a Ponzi scheme? Let's get started and find out. Cryptocurrencies are contributing a lot of money to political campaigns, taking us back to the 1920s Wild West financial situation. According to the CEO of California-based asset management research affiliates, cryptocurrencies are a Ponzi scheme that supports unlawful conduct. He cites explicitly Bitcoin and the blockchain technology that powers it as examples. What exactly is a Ponzi scheme? A Ponzi scheme is a type of financial fraud in which money from new investors is used to reward current investors with large sums of money. It is named after Charles Ponzi, an investment con artist from the 1920s. Unlike an actual investment, the fraudster doesn't truly spend money or take any action to make money. Imagine you invested $500 in a Ponzi scheme early on with the promise of a 20% annual percentage yield. Your $500 would be used by the con artist to cover the interest on the other people's purported investments. Then, they would have to get additional individuals to contribute more money to compensate you. But ultimately, the scheme would fall apart. There wouldn't be enough fresh money flowing in, and your $500 will have vanished. Probably the most well-known cryptocurrency Ponzi fraud was OneCoin, a purported cryptocurrency that didn't even have a blockchain to support it. Over $4 billion was defrauded by con artists from investors worldwide. OneCoin's principal developer, Ruja Ignatova, vanished and has never been found. But that does not mean all cryptos are Ponzi schemes. When asked about cryptocurrencies, Chris Brightman responded to Financial News by calling them a Ponzi scam that enables money laundering. Bitcoin is not a means of exchange, a trustworthy store of wealth, or an inflation hedge, according to Brightman, who took the helm of the $168 billion asset management firm in 2021. According to Brightman, Bitcoin is simply speculative, and individuals who have it profit by selling it to others at a higher price. Several asset managers have said that blockchain technology can revolutionize other sectors, and he said he was concerned about it. The technology has garnered attention for its capacity to produce unchangeable, decentralized ownership records. However, Brightman claimed that the more he researches the topic, the more useless he found the blockchain. He also says that the concern is what legal ownership this transmits, not if the distributed ledger is a legitimate coding style that may be used. He also calls the notion that cryptocurrencies can somehow use distributed ledger technology to eliminate all the restrictions imposed by decades of legal tradition a libertarian pipe dream. BlackRock, the largest asset manager in the world, recently stated that it was optimistic about the technology due to its potential to be disruptive. Brightman's remarks on blockchain technology followed this. Recently, when crypto values crashed, Celsius Network, a pioneer in the shadowy realm of decentralized finance, or DeFi, announced it was blocking withdrawals due to extraordinary market conditions. Celsius Network has more than 1 million clients. Also, recently, Bitcoin had its worst 24-hour decline since December 2020, falling 15%. Last month, Terra USD, a stablecoin that purported to function somewhat similarly to a traditional bank account but was solely backed by a cryptocurrency called Luna, failed, dropping 97% of its value in only 24 hours and ostensibly wiping out the life savings of some investors. How come this market is unregulated? This is mostly due to the unanswered question that hinders the modulation of digital assets, is whether cryptocurrencies are securities. Many analysts also argue that the 1929 and 2008 financial market crises should have taught us one crucial lesson. Financial markets need to be regulated. Otherwise, they develop into Ponzi schemes that eventually rob little investors of what they invested in and cause economic instability. Last year, many cryptocurrency investors made their initial purchases, and some of them, including my friends, are currently examining portfolios that have been sharply undervalued. Some specific cryptocurrencies have fallen by 90% or more from their record highs. Some investors are beginning to question if the skeptics were correct the entire time because of these protracted price declines, which are entirely understandable. Did we all fall for a massive con? It is unlikely. Not least because if Bitcoin were a hoax, the perpetrator would be actively making money off the scheme. The decentralized nature of Bitcoin, where there is no middleman, is one of its fundamental tenets. However, that's not to say that the cryptocurrency industry hasn't attracted its share of shady personalities. It most certainly has, as we have seen, but it is just that the concept of a Ponzi scheme doesn't apply to the digital money itself. Simply put, there is a significant distinction between making a high-risk investment and knowingly falling victim to fraud. To begin with, there is a significant probability that Bitcoin's price may one day rise, which suggests that the investment may someday pay off. Additionally, no one like Charles Ponzi is deceiving individuals into purchasing Bitcoin to benefit personally. Investors that invest in cryptocurrency do so in the hopes that it will change the world. Some regard it as a type of digital gold, while others think it may one day replace fiat money as the dominant method of payment on the internet. Additionally, it may win over a sizable portion of the lucrative remittance sector. The difficulty is that the industry is very speculative and the markets are young. Quantum computing or stringent regulation may also prevent the market for digital assets from growing to its full potential. However, despite the sharp price decline and the start of the crypto winter, we cannot label Bitcoin as a Ponzi scheme because all markets are slowing down. Whether it can do what Bitcoin proponents think it can is another matter completely. That's all from this video. What do you think? Is crypto a Ponzi scheme or just another investment vehicle? See you in the following video.